Welcome to the Financial Wellness Hour. I am your host, Hirsch Serman. I am absolutely thrilled to be here today on WGSN-DB, Going Solo Network, and I am very, very excited to announce that we are launching this show today. This is my first show. I look forward to you joining me for many more. The show is intended for those who are wanting to learn more about creating financial wellness, and we're going to be looking at different life cycles that people go through and exploring them financially and emotionally. Because personal finances, believe it or not, are usually not about the money. It's rather about the emotions associated with your personal finances. So our goal is to look at how do we prepare for these life cycles and thrive on the other side. Although we may have a theme for each show, and I'll get to our theme in a minute, I think that the strategies that we talk about are going to be applicable to pretty much any situation or most situations that you're going to come across and that you face. Although we're probably going to be a little general in our discussion as we speak, I would love to hear from you, make it a little bit more personal, make it a little bit more relevant. So please do call in, or their live comments, or you can go through my website, which is lifecycle.financial. So reach out and let's make this a little bit more personal for you. Going solo can mean different things to different people. Obviously, the ones that come to mind are going through a divorce, losing a loved one. Some people have chosen to be perpetual bachelors, but I'm sure you can look at it in a myriad of different ways that you want. So we're going to plan on covering all of these over time, not in today's show, but please do continue listening to future shows as we cover, our other topics and get your thoughts. And we'd love to learn more about what you want to learn about. Today, we are going to focus, as I said, mainly on divorce, but specifically on how to prepare for divorce and how to go through the process, hopefully save some money, and come out on the better side, on the other side, in a lot better fashion. How do we prepare for divorce? That's a huge question, and quite honestly, I wish people asked that much earlier in the process when they're contemplating getting divorced, as opposed to sometimes near the end of the divorce is when they're really thinking about these kind of things. So I'm going to start a little bit on the emotional side, get to the finance side, but I think people really need to understand, it's crucial to understand your specific situation, both financially and emotionally. For example, we're in the middle of a global pandemic. Somebody who's thinking about divorce right now, it might not quite be the right time, as stressful as it might be, because you may not have the privacy you need in order to speak to an attorney or a professional that you're working with. If you have a child who's getting married in 2 months, let's just say, that's not the best time necessarily to start right before somebody's wedding. You might be having a health procedure coming up and you're on a spouse's medical insurance. There's a myriad of reasons. There's a lot of reasons that might come up, and you just need to be aware of them, obviously, as well. At a minimum, I would say you should understand what is my short-term time horizon, what are the things that are happening in that, so that you don't derail the process and you can focus on what you need to. The other thing you should be thinking about is what brought you to this stage, to this decision. And I get it. It's not always your decision that you're not the one that made the decision, should I say. Having a little bit of a structure in how you do things is very, very important. Objectively look at yourself. What do you need? What are the things that you want? What are the things that you need to get through the process and beyond? I have so many people say to me, you know, Hirsch, I can't wait for this to be over. And unfortunately, I have to break the news. This is the first chapter in the rest of your life. It's not the last chapter in this one. The way you go through your divorce sets up your co-parenting, sets up your financial situation. It may set up your emotional health. And these are all things that are going to go well beyond the divorce, as opposed to end when the divorce is over. So having a structured approach is very important, and having teams is very important. There are really two different teams that I want to touch on. One is your emotional team. You need support. You need people when it's tough, when you're down, who are going to build you up and say, Hirsch, in my case, you know, you can get through this, and build you up a little bit and give you that support. I do caution you, just because somebody has been through a divorce, it does not mean that they are going to be great on your emotional support team. If they are still upset, if they are bitter, if they are negative, they're not going to help you in that situation. So please do be careful on that. Choose that team wisely. The other team is your financial team, or should I say your professional team. And I will get into that a little bit later, but picking the right financial and professional team can actually save you money through the process, and we'll get into that. So let's look at an approach. The one that I use is I do with every client, I prioritize, I organize, and I simplify. I'm sure that there are other approaches out there. I'm not saying you shouldn't use them. I think that they are great, but always having some structure and a focus to help you looking beyond, having that vision, building that structure is important, especially in a time when usually the exact opposite is happening, because it's a whirlwind, it's emotional, there's a lot going on, and sometimes you lose your focus and your vision. So having a structure is very important. I'm going to walk you through mine to understand how I prepare with people or help them get prepared. So starting with prioritize. You really want to take the time to think through what you need and what you want. That's kind of on a short-term horizon, 6 months to 12 months. It's also beyond. So how am I going to manage and get through the process, and what's it going to look like on the other side are very, very important. And setting those goals, having those priorities of what you want. I would suggest be realistic. People get upset, people might be angry. You don't want to be in a situation where I'm getting 100% of everything, because realistically that's not going to happen, and you're not going to be able to work towards that in an efficient manner, in a productive manner, and in a way that's really going to get you to the things that you need and want. The more you prepare ahead of time, the more you prepare now, the better you're going to be in the thick of your divorce, when things are really tumultuous, when things are emotional, and you know what you're working towards at that point, because you've prepared. You know what you want, you know what you're willing to negotiate with, you know what you are working towards. Be careful also, the items that you identify as not being as important, that you haven't prioritized. The less important items can easily derail you if you get caught up on them, and they can move you away from a resolution, or at least they can distract you from what you really want. So knowing those priorities also lets you make a better decision, because you know what you're willing to let go, what you're willing to compromise on, and the things that you really are not willing to. And so I think that becomes very, very important, especially when you're emotional. All the research will tell you being emotional is not the best and not conducive to making the best decisions. I do advise my clients, I think it's extremely important to keep in mind, emotions can be the most expensive part of your divorce. You may want to prove a point, you may want to show you're right, you may want to, so to speak, get even because you might feel I've been wronged in some way. It usually does not get you the satisfaction you need. I will tell you, I'm thinking of one case in particular right now. They spent almost $9,000 on a $1,500 item. Thinking clearly, anybody can tell you that's really not a wise move. It's not the best way to spend your money. And clearly that is driven by their emotions. Some of the things you should think about when you're prioritizing, one of them is, from a financial standpoint, what is our current cash flow? How does that work? And what would it look like at the end of all this when it's finalized? So giving you an example of how you might think that through. If both of the spouses in the divorce or going through the divorce are working, they both have some income, and you're the spouse that might receive maintenance. Well, you might think, I'm okay with what I earn. I don't need the full potential maintenance that could be given to me if we settle according to the exact guidelines of the law, which many states give you an actual guideline to follow. So you might think, I'm willing to take less maintenance, but I can now use that to negotiate for something else that I really want. For example, I might take less maintenance, and then I'm going to receive more retirement or expect more retirement assets in lieu of taking the full maintenance that I might get. You always want to be thinking, is this actually the best thing for me? Obviously, that's very, very important. And you need to understand the impact of, if I give something up, what am I giving up and the impact? And then also, if I receive something, what is the impact or the positive or the negative potentially of what I receive? Another thought is somebody getting back into the workforce, they may need 2 years or 3 years to really ramp up. It might take you 6 months or a year, especially in this environment right now, to get a job. And those are also considerations that you might want to think about. Something that comes up often, and I have a lot of discussions with clients around the house. Do I keep the house? Do I not keep the house? And we do get emotionally attached to the house. It's often where our kids grew up, or we've had events or whatever it might be that ties us emotionally to the house. And unfortunately, I just have to say to people, this is really a financial decision. I've seen too many people want to keep a house that they absolutely cannot afford. And sometimes it's the opposite. Sometimes people are thinking, I want to get rid of the house, but they need to evaluate and look at it and see, maybe it's advantageous to keep the house. I'm going to give you another example. I had a client who, when they reached out to me, they sent me one line email, and it basically said, I'd like to discuss with you when is the best time to sell the house. We looked at the situation. They had 32 months, about 2.5 years left to pay off the mortgage, and it was going to be owned free and clear. They were paying about $1,300 in principal and interest. Again, that was going to go away in about 2.5 years, and the divorce was going to run probably about 10 or 12 months still. So really, at the end of the divorce, there was going to be about 20 months left roughly on the divorce. So they would have had their total payment was $2,700. $1,300 of that is principal and interest. We negotiated and said 2 years into, once the divorce is finalized, the other spouse can cut maintenance by $750 a month, and I want to keep the house. What we really did there was we said $1,300 goes away in 2 years, basically a little less. Well, $750 stops coming in. We're still positive on our cash flow, and we have a paid off house. It cost about $1,400 after that for taxes and insurance. So effectively 2 years into the divorce, this individual was living off a home, $1,400. They couldn't come close to getting anything comparable for $1,400. So you can get very creative in the ways that you look at things, the house being a big one. And quite honestly, the house is one that you should spend a lot of time on, because it's usually your largest or your second largest asset that you might have. Understanding what the marital assets and what the debt are composed of is another big thing. It's one thing to say, I'm worth $500,000, I'm worth $1 million, or combined we're worth $1 million. But what does that really mean? And we'll talk about that in a little bit. Another one is, what is the custody arrangement going to look like? Custody arrangement is a big one. Everybody says, I want my kids to be taken care of. I want them to be okay. I want them to be healthy and all the rest. And we want that. It's important that we do, and we work towards that. Understanding how the custody arrangement and child support payments works is very, very important. Each state has different rules, and that's important that you understand your state's rules moving forward. So I'll give you an example. In Illinois, there is a threshold. It spikes at the 146th day or 146th night threshold. If you go under that, the spouse with less than 146 nights has to pay quite a bit more in the child support. And so if I'm the one paying, I want to be higher than the threshold. If I'm the one receiving, I want that other spouse to be lower than the threshold in order to get more and be strategic about it. So those are a lot of things to be able to think through as you go through it. It's very important, as I said. And as important as it is to think about what you want, it's not a bad idea to understand, what are the things my spouse might be asking for? It helps you set up how you're going to negotiate. What are the things that they might want that you're willing to give up to make a stronger negotiation? And then also, what are the things they're going to want that you also want, and what are you really willing to compromise on or not compromise. So understanding what they may be asking for as well becomes very, very important. That's prioritize. What are the things that I really want? What are the things that I really need? Organize. Second step. This is really building your game plan. How do I put it all together? I know what I want, I know what I need, but now it almost sounds weird. I need a game plan around divorce, but with any important decisions, you should be thinking it through and understanding, kind of creating that strategy. I think often, and I've experienced this, people come in and they say, well, we got to split everything 50-50. As the illustrator with the house, you don't need to. But when they do come to me, I'll say to them, oh, you don't need to split everything 50-50. And they go, oh, I didn't realize that. The example I will give them is, well, if you have a house, are you living on the right-hand side and your spouse on the left-hand side? Because you can't really split that 50-50. And I think that puts it into perspective quite often, very, very easily for them. You can split things 50-50, and there are ways to do that, especially if you don't own a home, but it doesn't have to be that. So if you've prioritized, you can now start to strategize, organize around what do you want. And I think that illustration obviously helps, but you don't need to split the retirement accounts 50-50 or the other accounts 50-50. You really can look at it in a different way. Understanding your options as you go in is very important as well. Some people sit across a kitchen table and they negotiate. I want the dining room set, I'll give you the bedroom set. That's one way to do it, and quite honestly, quite an effective way to split the assets, as in the stuff. You may want to go beyond the stuff, that's your call if you want to, obviously, but just so that that is one way that people do it, and it's very often a way that you can save some of the money, as we were talking about. You may go to mediation. There's going to be a mediator that's going to go between the two parties. They're a neutral party, and they're going to be asking questions, trying to bring you closer to a resolution. And I will caution you, a lot of people think that a mediator is there to resolve the issue. They are not. They are there to facilitate your discussion, a productive, healthy discussion, and move you towards, if possible, a solution. There's collaborative, where there's people acting neutrally for both of you, and then going to court. Going to court, you need to be aware that you lose the decision-making power to say yes or no, and that's very important as well. Simplify is really trying to get it down to its basic. How do we get it down? How do we make it as simple as possible? If you're creating a bill-paying system with somebody because they haven't paid their bills in 20 years, the spouse has been doing that, how do we get it into a system? How do we make it like a checklist and very simple? Because it's going to become a whirlwind very often, or times might be, and you need to be aware of that. So simplifying becomes very, very important, because as things get more hectic, you want things as simple as possible. We are going to go into a break in a little bit, but I want to give you a little bit of a teaser. Firstly, I want to give you my contact information. I am Hirsch Serman. The best way to get in touch with me is through my website, lifecycle.financial, and my phone number is 312-985-6648. We are on the WGSN-DB network, the Going Solo network. When we come back from the break, we're going to cover quite a few different things. We're going to look through some of the financial considerations like a budget, your net worth, understanding your debt, what's going to change. And then we're going into some of the obstacles. We're going to talk about this team I mentioned, this professional team. How do we build that team? How do we use them effectively? And then we're going to talk about how do we save some money. So a lot coming up in the next 20 minutes when we come back. And I am looking forward to you joining us. Please do send me any questions that you have or any thoughts. I'd love to see them. I'd love to include them in the show and make it more personal. We will be taking a couple-minute break just to pay the bills and for our other stations to be able to be online with us. We'll be right back. Thank you. Hi, and welcome back to the Financial Wellness Show. This is Hirsch Serman. As I mentioned earlier, we are on WGSN-DB, the Going Solo network. And I am thrilled again to be here because this is my inaugural show. You can reach me through lifecycle.financial. Before the break, we covered quite a few things. We covered setting your priorities, working through a game plan in organizing, simplifying things for yourself. We want to understand, obviously, the approach we're taking, but we also need to understand the situation that we are in. So we're going to continue. We're going to talk about some financial considerations. How do we prepare financially for a divorce is very important. The first piece that I look at is I always advise my clients to really understand what is my financial situation. I'll tell you, 70% of households right now do not have a budget. That's a statistic. It hovers right around 7 out of 10 households. It's important to understand your budget, and we'll get into budgets. It's important to understand your net worth. It's important to understand what debt you have, because not all debt is equal. The other thing to consider is these things are going to change quite a lot as you go through the process and after the process. And honestly, you don't need to be going through a divorce or a major life cycle. All of these are pieces that are going to contribute to your financial wellness. And all of these are things that you need to understand no matter what situation you are in. Another thought in preparing for a divorce is a lot of states have different requirements as to whether you do or do not need to have a financial affidavit. I recommend to my clients fill one out, especially if you think there are going to be games played, if you think that potentially they are going to hide money. It's the kind of thing that kind of keeps people in check very often because it's a legal document. It gets put in front of a judge, but it also helps you see what they are claiming, and obviously bringing your knowledge to the table, you have a bigger picture or more complete picture sometimes. So let's look at that budget. This may well be the foundation for your plan, not just for divorce, but your financial wellness plan in general. I had a client say to me in a divorce process, Hirsch, I think we are really close. He said to me at our last meeting, just give me a number. All I need is a number. And my client looked at her spouse and said, I don't know. She was scared, obviously, to look ridiculous and overshoot, but even more so, she was scared to put herself in financial peril because potentially she could undershoot, put herself in a situation where she had a shortfall financially every single month. A budget should be so much more than just a spending tool. I track my spending and I track what comes in. It should be something that you can learn your spending habits. And I know, I get it. I deal with enough people that they are almost probably a little scared, quite honestly, to look at some of the habits that they have. But I think it is very, very important. It's vitally important to understand because things are going to change. And usually it's, not going to be quite the same lifestyle that you had before. I do budgets a little bit differently. The traditional way of doing a budget is how much money is coming in. And I need to distinguish, if you're earning $100,000, that's not what's coming in. If your salary is $100,000, you have taxes and other things coming out of that. And so what's coming in is actually less than that, and you do not have your full $100,000 to spend. So most budgets, the traditional way is we look at what's coming in, we look at what's going out, we say a little bit of a prayer, we cross our fingers, and we say, I hope there's a positive number at the bottom. Well, you know what? That is an important thing to do and understand that, but I think you can get more out of it. As I said, this can be a learning tool. The way that I do budgets, I start off with only the essential pieces of what you need. Your mortgage, your car payment, your groceries, these are things you need to live and to, so to speak, exist, if I can say that. Then I look at the income coming in and we have a conversation because you need to live. You probably want to and need to spend a little bit more than this because we can't just exist forever. So with that, we look at how do we look at this discretionary spend? How do we get the most out of it? How do we make sure that we creating healthy spending habits? Because anything over that threshold of your essentials is really something, when you look at it, it's a spending habit or a choice. And we are now trying to make healthy choices, healthy spending habits. And so your budget becomes incredibly important. For the impulse purchases out there, because that can easily derail a budget. And there are a lot of people out there, quite honestly, that do impulse buys. I want you to ask yourself this question, and I have to give credit to a friend of mine who gave me this line. But he said the line that he used, which I use with all my clients, is that you want to ask yourself, is future me going to be upset with current me? It's a very powerful thing because it kind of gives you a little bit of a pause, and it helps you think about things in the future, not just your urge to buy something now. I'm going to give you an extreme example of a client that I was working with. We'd been working for a little while. He wanted to buy a car. His car was pretty old. And he came back and he was very proud of himself. He said, Hirsch, I asked myself that question. Is future me going to be upset with current me? And I saved $18,000 in buying the car. And my first reaction was, wow. He asked himself that question. He saved himself a lot of money. And I said to him, I am really proud of you. And I was. I think that's an enormous step. Somebody earning a lot of money and never been on a budget and never thought about finances in this way. It's a huge step. I must be honest, there was a second reaction that I had. How much was that original car if you saved $18,000? I will say I did not share that with him. I wanted him to celebrate that win, but it is something that it can save you a little bit of money at a time, or it can really save you a large amount of money all at one time. Understanding your net worth is also vitally, vitally important. Understanding what is in retirement versus not retirement. Even in your retirement, is it a traditional IRA? Is it a Roth IRA? Because the tax impact and the actual financial benefit of those two vehicles are significantly different. They're not going to be the same between the two when you start to withdraw the money. So those are all things that are important. Understanding what is liquid and what's not liquid. So your retirement accounts generally are not liquid. You got to wait till you retire. Your other accounts may not be liquid, or your other assets. For example, you may have a 1-year CD. You can't get to that money for another year if you've just taken that out. Your house, if you don't have the ability to tap into your equity, is usually not a liquid asset. So really understanding this mix becomes very, very important as well. And your debt, not all debt is created equal. You might have a credit card at 20+%. The average credit card right now is hovering between 16 and 17% of what you pay. If you have medical bills outstanding, you might be paying zero. Understanding, and I'm not going to get into every debt there is, but the common ones are your home, your car, credit cards. You might have student loans. You might have medical bills, things like that. Some of them are deductible. Some of them are not. Some of them are deductible in certain instances. Some of them are not. So you really do need to understand what they are. What are they associated with? Which assets? Because they usually follow the asset. If I have a car, the car loan will come with me after the divorce. And then in addition to that, just understanding how would they be split, knowing that I'm not getting all the credit cards at 20%, you getting all the medical bills at 0%, and understanding that, because these things do impact your credit rating and your credit score, and all of that becomes very important. So preparing becomes very important, and not just understanding what you have, but also understanding what are the obstacles that I might be following or might fall into. There's a lot of them. Often this is very unfamiliar and scary territory that you are navigating. This creates disarray and confusion, and people often don't know how to navigate this fog and this confusion. So having the right professional team, which again, my little teaser we're going to get to in a couple minutes, is very, very important for you in order to understand, get you through the fog, and create those plans that we were talking about. The other piece is really understanding your financial situation. As I said, part of that is managing your day-to-day finances. The biggest demographic getting divorced right now is 50 and over. These are people very often that have not been paying bills, for example, for 20 years, and bill pay has changed. It used to be you wrote out a check, you licked a stamp, you put it on an envelope, you had to go to the mailbox and mail it. Now it's auto deposited or debited to your credit card, or you pay it through your bank account. Quite honestly, if I write one check every 3 months in the old-fashioned way, it's a lot. But these people are not familiar with it. because they just have not been exposed. We tend to divide and conquer when we get married. And most often, in my experience, I've seen that the husband is the one managing the finances. This is just the reality of it. I will tell you, just because he was doing the finances doesn't mean he was doing them well. Very often is not doing them well. He was not born with a calculator in his hand. He had to learn it, and sometimes often is just winging it as he goes. So learning it, creating that system often becomes a challenge. But as you learn it, as you get empowered by knocking these things off your list, I think it becomes quite empowering, quite honestly, to move forward and see how these things work. Another big obstacle is becoming emotionally attached to something. As we said, often it's the house. The house is something that we've had memories, our kids have grown up in, but really we should be looking at this as a financial decision, because very often, although we want it emotionally, very often it's a house that was built on 2 incomes or bought on 2 incomes, and we do not have 2 incomes going forward, and we need to be realistic financially and evaluate the house. What can we afford, what we cannot afford, and being able to move forward with that. I will tell you, when I went through my divorce, my attorney gave me some unbelievable advice, and I know it's going to sound a little bit cold in the beginning, but it really was very, very good advice and put things in a very good perspective. He said to me, "This is the dissolution of a business that you are emotionally attached to." And I want to say that again. He said, "This is the dissolution of a business that you are emotionally attached to." It's hard not to be emotionally attached to a home that you've created memories in, your children, a life, whether it's 5 years or 50 years of marriage, doesn't really matter. It's hard not to be emotionally attached in some ways. But again, you need to try to look at this very objectively. The more you can put it into a financial situation, the more objective you can be. I think the better your decisions are going to be, the less emotional decisions you're going to make. And I think that becomes very true in your decision making. It's going to help you build a much better outcome at the end and beyond. So this elusive decision or team that I've been talking about, the professional team, let's start to build that and look at that, because it is a very, very important part of getting a successful outcome. It's important to remember people have different strengths, people have different expertise, they have different training, and they have different areas that they work in. For example, even with attorneys, they may know the law incredibly well, they may be fantastic mediators, but if your case goes to court, very few do, roughly about 2% of cases go, but if your case does go to court, are they a good litigator in the same way as they're a good mediator? Understanding those expertise become very, very important. In the same way as understanding your attorney's strengths, you need to understand that although they are very good potentially in the legal aspect and have been trained in the legal aspects, they have not been trained in every aspect of divorce. The same way you do not want me being your legal representation and acting as your attorney through the divorce. I've picked up a lot of legal pieces. I am certainly not your expert for divorce. I'm a finance guy. I will help you with the finance stuff. But again, your attorney is not the finance pro in the same way that I'm not the legal pro. They're not your therapist, your divorce coach, your real estate agent, whatever it might be. I think you get the picture. But building this team is very important. And it almost sounds a little crazy or counterintuitive, but if you can build your team, the right team, for using each professional in the right capacity, you're actually going to save money and you're going to have a better outcome. Here are some of the people you're going to want on your team. If you own a home, we've spoken about, potentially having a home, you want a real estate agent, and you want a mortgage broker who are very familiar with divorce. There are unique issues that arise within a divorce that are very important. If you're keeping the home, you can't just take somebody off a mortgage or the deed. You have to refinance that mortgage. Very, very important. Or if you are getting maintenance payments and you want to refinance or buy a new home, there's a time frame that most banks are going to work with you that they want to see a consistent payment for you. All of these very, very important pieces. You want to take care of yourself. Self-care is huge. You want to take care of yourself emotionally and spiritually. So your attorney is not the right person. You probably want a therapist, or you probably want, a divorce coach or someone like that. And then again, having that right person and being careful not to spend money in the wrong places becomes very important. I would say you need to also look at your team and that they align with you. They need to match up with your needs. What is the vision as you went through your prioritize, organize, simplify? What are the vision that you have created, and are they aligned? Are they have the same values of you? Are they in your budget and going to work with you to get your goals? All of these are incredibly important pieces for you to keep in mind. One of the things that I think is very daunting is people think, wow, expenses are going to be off the charts, and there are ways to save that. By the way, let me just come back. I just want to say again, we are talking, this is the Financial Wellness Hour. We're focusing obviously on divorce. One of the things, though, if you need help picking a specific person for your team, whether it's an attorney, financial professional, whatever it is, do me a favor, give me a call, send through my website. I will send you a great blog that I wrote that helps you do that. And we're going to talk a little bit about lowering those expenses. So again, using the right professional in the right capacity. You don't want to go to your legal professional and say, hey, I need a vent. I need you as my therapist. $500 or $600 hour therapist, that's not a trained therapist, not the way you want to go. And I'm not picking on an attorney there, but more often than not, the people going off on the tangent are the client, and the attorney gets the blame for that. But be very careful. Use your time wisely in how you do it. Be very, very prepared. I think that's very important. Have a list of the questions. Know when you meet, what do you want to accomplish? Don't have a stack of papers and spend time 5 minutes trying to find the piece of paper. Be organized in all of those ways. They're going to work with you very well. They're going to help you. They're going to save you a lot of money in that way. Again, I'm not picking on attorneys. Attorneys are very needed in the process. But I think sometimes, and this is any of your professionals, if somebody says, how are you doing? And you spend 10 minutes, telling them, how am I doing? You've just wasted 10 minutes, and you pay for time. So be cognizant of that time. I think it's important. As we said, be organized, know what you want to accomplish. All of that I think is important. Before we kind of wrap up and do a bit of a summary, because we covered an enormous amount today, I just want to say we're going to be back on in about 2 weeks. Please do join us. Next time we are going to talk about going through the process. We are the Financial Wellness Show. My name, your host, Hirsch Serman with Lifecycle Financial. And this is going to be every 2 weeks on Tuesdays, 7 a.m. Pacific, 10 a.m. Eastern on WGSN-DB, Going Solo Network. We're on Facebook and YouTube, or you can go to the website and tune in there as well. I'm going to quickly give you a summary of the things that we have covered today, because we did cover a lot, and I think it's important to have some good takeaways. Be structured in how you do this. If you are contemplating and ahead of time, again, have that structure. The one we spoke about was prioritize, organize, and simplify. I think really knowing your situation is important. Looking at that budget, knowing what the spend is, knowing what it's going to change to, understanding your net worth and how that's going to impact you. Your cash flow, very, very important, because that's going to change drastically as we go. Debt is not the same. Not all debt is the same, should I say. Understanding your debt, what is going to come your way, how does that impact your credit? All of these things are very, very important. Identifying those stumbling blocks, and sometimes it's you, to be blunt. You need to be able to move forward. You need to make financial decisions. You need to be able to create that budget, create a financial wellness, create a financial system for managing your daily finances, your future finances. Have the right team potentially to get you on your way. Building that team is huge. Saving money, I think everybody wants to do. So again, a lot of things that were covered today. Next time, we're going to talk a lot more. We're going to talk about splitting the assets. We're going to talk a little bit more about the debt. We're going to talk about understanding what you need to know through the process. You can contact me, Hirsch Serman. Again, my phone number, 312-985-6648, lifecycle.financial, or you can reach me through my email, Hirsch, HIRSCH, at lifecycle.financial. The show is the Financial Wellness Hour, and I'm looking forward to speaking to you again in 2 weeks. Again, it's bi-weekly on Tuesdays, 7 a.m. Pacific, 10 a.m. Eastern on WGSN-DB Going Solo Network. Thank you for joining me. I look forward to your questions and seeing you in 2 weeks. Please tune in and make yourself heard. Thank you so much.